Good Thursday morning, everyone. Hey, it is Rick Kaufman here with LMA Trading. Hey, it is 7:17 here in the morning on Thursday, September 2nd. Yes, the second day of September. It is here. The markets are, I think, patiently waiting the jobs reports numbers or the numbers, employment numbers and payroll numbers, all those things here tomorrow. And actually, I think right at around market open, I believe, or before market open when they come out around 8:30, between 8:30 and 9 o'clock or 9:30, I think, in the morning Eastern Standard Time. But um, the markets have been kind of, I would say, kind of in consolidation mode here the last few days, which isn't that, which is not a bad thing. It's just kind of a little bit of a chop fest. But hey, what I want to talk to you about today with my pre-market prep is basically how journaling helps with your training, and I believe it all starts with um, the pre-market. Your pre-market analysis this time in the morning is, I believe, the most important time of your trading day. It's something that needs to be done. You know, and again, it's a little after 7 o'clock in the morning. It's about a little over 2 hours before the market opens. Obviously, my pre-market prep, anything can happen between now and market open, which really doesn't necessarily validate my analysis in the market. But want to kind of give you a couple ideas on that here this morning. So let's go ahead and jump into this video. Well, you know that I'm not a financial advisor, and nor do I give financial advice. Stocks and options have risk, and they, are not suitable for every investor. You can lose your money. You can lose all your money, every bit of it that you put into the market. Understand that cash is a position, and it's okay to be sitting in cash in times of volatility, in times of uncertainty, in times of, things that may not feel, allow you to be kind of comfortable. Stocks are very, very emotional. The price action is very, very emotional, especially when you have your real money. So with that being said, the market is really a collection of people's emotions, and the stock chart allows you to kind of read those emotions. And I think this morning, when I'm looking at the emotions of the market, I think the emotions of the market are rather mixed. There are some people betting on the market to go down. There are some that are betting on the market to go up, and I think there's a lot of people that may be just sitting on the sidelines. This very well could be a sign that the markets could go down, and or the markets could go up. So in other words, it's kind of a coin toss situation. The markets pulled back yesterday. We didn't really have a huge spike or anything in volatility. Volatility has been kind of dropping, which might lead you to believe that low volatility will lead to higher prices. The market's not really reacting a whole lot to that lower volatility. So that kind of tells me that maybe people are sitting on the sidelines. They're not buying, but at the same time, they're not necessarily selling. So, the markets, like I said, they did kind of sell off, and I had a couple positions. We did close out our Amazon position after a huge move this past week, and it was kind of showing some signs of an exhaustion, slowing down as it was getting up to that resistance level. After it was really just about to fill the gap, and so we took our profits. It was a good double, and that's that's good for me. Consistent, and not necessarily the home run, which, yeah, I would have liked to have had a triple or a home run, would have really made my day. But nonetheless, you take what you can get and what the markets will give you. And so that's why I feel that pre-market prep is the most important time of the day, because it allows to set my mind and my emotions correctly. So let's jump into this, and let's move over into our charts here, and we will start with the Dow. The Dow has been consolidating for the past week and a half since we've had that downturn almost 2 weeks ago, where we had 3 days kind of pushed down, and then we had a strong buy the dip here. So they, and that's kind of indicated by the low volatility or the low momentum in the Dow, and also with the there's been a lot of selling and kind of back and forth with the buyers and sellers. The bears have kind of been in charge of the markets the last 3 days. Right now, the bulls look to be in charge of the market here in pre-market. Also, what's driving this consolidation is we are in a weekly squeeze. We got a buy signal last week, and this week we're sitting on the cusp, and whether or not this is going to fire to the upside or the downside, really no way of telling at this point in time. We are in a daily squeeze. So, right now, I think with the bullishness of the market, I would probably venture to say that, it's a better than 50% chance that when the squeeze fires, it fires to the upside, possibly after some consolidation. So the consolidation's meeting here, and we're dropping back down close to the 21 EMA. So so we're getting some, possibly getting some support from the 21 EMA, and we could see a small bounce here today, leading into the expectations of the numbers and the job reports or job numbers tomorrow. I've got my Bollinger Bands on here this morning. The Bollinger Bands are showing some tightening, some restricting. So as the bottom Bollinger Bands are pointing more up, the top Bollinger Bands are a little more level. Actually, here looks like maybe today a slight straightening or bending upwards, and so there's a possibility that we may be getting some price action pushing to the upside. Um, and let's jump into the Russell, the good old Russell. The Russell's pushing up higher. We shorted the Russell here. I've indicated that we've hit a double bottom here, and then we hit this momentum. When we shorted down, we hit the support here, and basically got to the two to three ATR, roughly thereabouts, to the my second Bollinger Band, and we caught a bounce there, and from there it springboarded right off of that and shot up. We hit this resistance right here, and so it hit the resistance and it pulled back, and then it caught support at the 21, and it's this very, very bullish. And so we could see a bit of a reversal on the Russell, like I said, from this point on. So small caps, things like that, could be rallying into September, and we'll see if this momentum can hold. Right now, I'm still kind of neutral on the Russell. Not sure. I'm not sure of whether or not this little rally is going to hold. We really need to push. We're still, we're 92% from our well, we're actually 8% from our 52-week high. So we're within 10% of the striking distance. So this trend is neutral right now, but it's probably on the daily chart, it's probably reversing. We do have a buy signal down here on the that came in last week here. So this could be a good spot here if you're looking to play the Russell to the upside, possibly. So we might be looking at some credit spreads, short-term credit spreads here on the Russell. So we'll play that most likely on the rut is probably what we would play it on. Let's jump into the Qs. The Qs, the technology has been strong right now. And so with technology being strong, it's pushing to new highs again. It's up about 38 points. We'll see if this is kind of what technology did yesterday. We closed, it pulled back and closed right around the same way as where it was on Tuesday. And so I would say right around that 15.6 area is where, or where we have some support. And so if we can hold that 15.6, and we should be able to push higher, but we are way overextended. The Bollinger Bands are flaring open here to the upside. And the bottom ones are acting a little bit as support. The 21's coming up. So we are at the 3 ATR. And typically when we get to the 3 ATR, we see a pullback. If we go back and we look here, when we're running up between 2 and 3 ATR, the Bollinger Bands were opening up, and then we topped out here at 15,000, and that's when we got a pullback. And then we bounced up to 2 ATR, another little pullback back to 2 ATR. So we are overextended. So I would be looking at, there's the Qs are due for a pullback. And so we've been catching some consolidation here. So possibly the catalyst for that pullback could be our numbers tomorrow. If the markets don't, or if the markets don't like the numbers, or even if they're good numbers, they might anticipate that they're not good enough. And so just really don't know what to think of that at this point in time. Let's jump into the S&P. The S&P is also kind of similar chart to the Qs. On the daily, we are consolidating right at this basically 4530 number roughly. So we're consolidating right there. So that's a key level. We need to get to 4550. If we can get to 4550 and hold that support, then today that'll bode well for number one. That'll be good for my SPX trade that I put on yesterday, that is expiring tomorrow. So I would like to see that. That'll make me feel a little more comfortable in the level where I'm at, because it is a high probability trade, but at the same time, the reward is not necessarily the way I'd like to have them on those, but they do trade well. So I do like those a lot. But at this point in time, the emotions, remember I was saying that the emotions of the market can play with you, that the price action is really a collection of people's emotions. So when the emotions get to me, then I may pull out of the trade. When other people's emotions get to them, they pull out of the trade. They have weekends. Sometimes not willing to give up the gains that, we've had a great, about an 8% increase in our account just this week with a few trades, and Amazon being the biggest one of that. But that's hard to give up. You can give up 50-60% of that in one fell swoop, and with one trade decision that doesn't work out. And that is something that I don't like to do. So the emotions can get the better of you. We were talking a little bit about why is journaling important? Why is journaling, how do you journal your trades? But it really helps with your trading by doing that. And it's really made a difference in my trading. And I've shared this before in some other videos, but, I use a PowerPoint presentation. We have all these slides here. We take screenshots of the pre-market. So this is a screenshot of yesterday's pre-market. I typically take this screenshot after I record the video. And then from that standpoint, I type a few notes in here as far as, things I talked about. And that helps me remember that. Sometimes I'll go back in and I'll add the link to the video of the pre-market prep, because these videos are part of my trade journal. They are part of my trade journey, and so they're really for my educational purposes, for me to go back and review. So this is an important part of the process. You don't have to put videos, you don't have to record yourself, you don't have to do those things, but for me it helps. And whether or not anybody watches this or not, it doesn't necessarily matter to me. This is all about just putting it out there, holding myself accountable, and then putting it into a trade journal. Kind of working through, and then this was the market close, and then this is the trade on my Amazon trade. at the market close. And, and I write a few notes down here. Amazon for the win. It was a nice double. Amazon hit the bottom of my target. It can, it can short, it came short, actually, some typos there. So, by roughly $6 short of my actual target. But, and then I'm looking to get back in if we see a pullback to the mean, as it's a little bit overextended. So even on that chart. So this is why it's important to do this. And we put in different types of notes here. This is again going back to the 30th, talking about the Amazon trade, and just allows me to go back through and review. But at the same time, I can check this against my pre-market prep. I can check this and see if my analysis is correct. And so that's why journaling helps you with your trading, because it allows you to review. It puts your thoughts and emotions down on paper. And then that way, when you get emotional or when things happen in the market and you react to them, then it allows you to put things in perspective. So you learn from that experience. That's why I believe that this part of your day is the most important part of your day. So, let's take a quick gander at Amazon while we're here, because, like I said, pull in here to my Amazon trade and enlarge that. But Amazon, I had my first target right in here about 55.30 or 35.30. We came, the high on this candle is 35.27. I actually was wanting to get to 35.44. That was the 618 retracement here on this bounce. And so, we pretty much got there, and it hit that. We then put in we adjusted our close order, and we put that back in. We got a little pullback, and then we got to run into that, and we sold that. It was 177% gain is what we had on this. We got in right down here, and on a nice debit spread, out of the money debit spread, and we rode that all the way up. And that was, I did not expect it to happen this quickly, but Amazon is a beast. It can be very, very strong and very, very bullish. And so let's see, if we're going to get some continuation. We're getting up here on the daily chart, a little exhausted. So, we may see the price action begin to slow down on this. The weekly chart, we have a great buy signal. So Amazon is looking awesome going forward. We'll be playing this a lot over the coming weeks, I think, riding this momentum on the long-term chart up. So we'll be looking for other plays like this. And when we look at this on the shorter time frame charts, this is what caught my attention yesterday. See, we hit here, we saw this pullback. I put in, adjusted my sell order, and we basically had a double top here on the 30-minute chart, a double top on the 2-hour chart, and a double top on the 4-hour chart. That caught my attention, and we proceeded to sell off into the close, and it was pretty decent. On the 30-minute chart, it was close to a 5 ATR move on the 30-minute chart. So that was a big move to the downside. We now have a 30-minute buy signal down here. The 2-hour chart is closing in on exhaustion. So, looking at this here, potentially could be another entry point here at the market open, and Amazon continues its rally. So we left some money on the table, but as I always say, you cannot go broke taking profits. This is why your analysis is important in pre-market, because it sets you up for the day. It sets you up for, success, whether or not that success is a win or it's a loss. It's a success if you understand the emotions behind it, and it allows you to understand the price action, which is really a collection of people. And it's a collection of people's emotions. And I say that a lot, but I have to remind myself of that too, because, the market's going to do what the market does, but the people react to that. And so typically most reactions are overreactions when it comes to the market because it's driven by emotion. So some of this could have been overreaction. A lot of traders may have saw this same thing that I was seeing into the day, and so it pulled back. And so, and people took profits. If they were writing this up over the last several days, they took profits. So this was just a normal course of probably some profit taking, and now people may be re-entering and things like that. I'm not sure if I'm ready to re-enter. I think in this case, I'm going to wait on Amazon. I'm going to wait to see if we get a respectable number, or see how the markets react to the numbers tomorrow before getting back into a big mover like this. Because I could get in, it could pull back, or gap down. If I get in today, it could gap down in the morning and really erode a big portion of our win. And so I want to make sure that that is a good entry and a high probability entry. So that's what we're looking at here today. We'll be watching our SPX trade, and we'll be looking at, if there is a spike in volatility today, we'll be looking at possible entry, but most likely, again, probably will sit on my hands today, unless something presents itself and when I say it presents itself, all the buy signals all have to be in alignment, and if they align with what I see in the indexes that I see here today in my pre-market prep, then we would take the entry. But if any entries we take, we probably are going to be looking at credit spreads here today, a little more conservative, a little more forgiving strategy, versus taking on a little more risk, but looking for that higher risk to reward, but with that comes lower probability of success. So when I got into the Amazon trade, it was only about I want to say it was about a 18% to 20% probability of profit. So that's, so it was 80% chance that the trade wasn't going to work. And that's why these things can pay off so big. They fail more often than they work, but when they fail, your losses are small. But when you get one of these big ones, then you don't have to trade as much. So with that being said, you guys have a great Thursday. Hope you enjoyed this video. Click the like button, subscribe, and we will see you guys tomorrow.